Welcome back. The U.S. lifting chip software curbs on China. Christina Partsinevelos has the details with Cadence Design, Christina, popping almost to the top of the S&P.
Yeah, one of the big movers today, and that's because the Trump administration is showing an abrupt reversal of a 6-week chip design software export restriction to China, and it really, like you mentioned, sent shares of Cadence and Synopsys both up. Cadence up 5%, Synopsys almost 5%. In exchange, China will likely smooth the permit process for materials it recently restricted, including rare earth. Mizuho, though, on one hand right now, they just put out a note suggesting Trump's chip software U-turn could really restore at least 10 to 12% of total revenues for both of these names, Cadence and Synopsys, that was at risk. The rumors, though, have been milling about for this reversal just over the last week or so, which probably explains why you're not seeing as much of a stock pop for these two names. The move, though, also resolves restrictions on electric design automation tools that control 70% of China's chip design market. But it also raises bigger questions. Could tougher export controls on advanced AI processors from Nvidia and AMD also face similar reversals as trade negotiations progress? Unlike Cadence and Synopsys, AMD and Nvidia don't produce EDA software. That's what it's called, electronic design automation. So today's announcement doesn't directly impact them. Nvidia's H20 AI chips designed specifically for the Chinese market to comply with prior export controls still remains restricted, as do other advanced AI processors. And we know Jensen Huang and other tech CEOs have been very vocal about the restrictions, wanting them to be reversed. Still, this swift policy flip reinforces President Trump's pattern of using tech restrictions as negotiating leverage rather than permanent policy tools, especially given how intertwined these supply chains are. I reached out to Nvidia, seeing maybe by chance if they happen to hear anything. They said no, but we know that they've been working, and there's been a lot of travel to D.C. over the last couple of months to try to reverse those export controls, specifically against AI accelerators and GPUs. Guys?
Jensen Huang, the CEO of Nvidia, may require a larger sparkler as Americans light 4th of July fireworks. Less over 3% separated the stock from the historic $4 trillion market valuation milestone on Thursday, when it closed at $159.34. It will be the first chipmaker to reach $164 and only the second American business to do so, following Microsoft. There's more to that than bullish momentum. It's an entirely different orbit. Nvidia didn't just recover from a brief tariff rant over China's restrictions on AI chips. It took off. According to The Information, a Morgan Stanley note this week that mentioned very strong demand for all Blackwell form factors added gasoline to the fire. Europe is rising up as China's sales are being pressured. Nvidia's numerous new alliances with European AI developers may be the necessary offset investors. Nvidia's dominance has not been challenged, despite rumors that competitors like Microsoft and Alphabet's Google are creating their own AI chips. OpenAI actually downplayed the hoopla surrounding TPUs by stating that there were no plans to grow Google's chips. When it came to creating its own silicon, Microsoft experienced delays. Apple's AI initiatives are still specialized and not really dangerous. Here's the real deal for those doubters who claim that this is a bubble. On forward earnings, Nvidia trades close to Broadcom and at a discount to AMD. As according to data, AMD and AVGO trade at 37.18 and 32.89 PE forward, respectively, while Nvidia's stock is now trading at a forward earnings ratio of 36.63. If not a deal, then at least reasonable. Nvidia's figures are refreshingly grounded in a market when mega-cap stocks are frequently accused of being overpriced. Those seeking to position or trade for the $4 trillion Nvidia moment may want to think about, if markets remain risk-on, the accumulate zone will be accumulating on any decline below 158. Targeting 170 plus in the near future, we are keeping a careful eye on any breakout over 164. Risk management. Put your stop loss close to $152 and check for fresh stories on China. Despite the popularity of AI, Nvidia still maintains a firm hold on the actual infrastructure that underpins the hoopla. The next few days might bring about a huge milestone, $4 trillion, and counting, as new demand channels open in Europe and competitive threats fade. Investors have recently found artificial intelligence, AI, equities to be very profitable, especially last year when some of the industry's top companies produced double and even triple-digit percentage increases. Investors have just returned to this intriguing tale, despite the fact that the share prices of these high-growth companies fell early this year as a result of worries about President Donald Trump's tariff intentions. In contrast to the worst-case scenario that many had feared, Trump's trade talks and tentative agreements on the frameworks of deals with the UK and China have increased optimism that his tariffs won't result in significantly higher costs for American consumers or significant earnings pressure on American companies. As a result, investors are more at ease funding businesses that depend on a robust economy to prosper, like those in the AI field. As a result, a lot of investors are once more wondering whether AI companies are the best investments right now. With their ambitious AI goals, Nvidia and Meta platforms both hope to change the course of history. Which is now the better AI bet if you could only purchase one? Numerous AI triumphs have already been achieved by Nvidia. The business is the preferred supplier for any organization developing an AI platform or software because of its vast hardware and service empire. However, its graphics processing units, GPUs, are the gems in its crown. It provides the best performing parallel processors, and because of its manufacturing leadership and ecosystem, they are also the best-selling products in their class. Nvidia has been increasing its sales at double and triple-digit percentage rates and breaking revenue records every quarter as a result of the demand from cloud infrastructure companies and other IT sector participants continuing to surpass supply. During its fiscal year 2025, which concluded on January 26, Nvidia saw a revenue increase of 114%, reaching a record $130 billion. As it continued to produce high levels of profitability on those sales, the company's net income increased by 145% to about $73 billion, in addition to its top-line growth. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video. Since Nvidia's GPUs are among the best chips available for training large language models, LLMs, and for inferencing, the technical term for using those trained models to process real data in order to solve real problems or make predictions, the company's clients today rely heavily on its hardware to power their projects. From designing AI agents to powering autonomous car systems and drug discovery platforms, Nvidia is assisting customers with a lot more. To keep ahead of the competition, Nvidia is also consistently inventing. Previously, it released new designs roughly every 2 years, but it recently changed to a faster pace that will see it release chips based on new and enhanced architectures annually. Thus, this business is probably going to continue to have a significant impact on how AI develops in the years to come. As the owner of social media programs, some of which you likely use on a daily basis, Meta will be most familiar to you. Its core family of apps consists of Instagram, Facebook, WhatsApp, and Messenger. Additionally, the corporation has made billions of dollars in income and profits from the selling of advertising space on such platforms. However, AI is now a major area of interest for Meta. Llama, the company's proprietary LLM, is open source, allowing anyone to contribute to its development. A higher quality product can be produced more quickly using the open source paradigm. In this instance, it might even help Meta become a market leader. The business has backed up what it says. This year, it intends to invest up to $72 billion in capital projects to increase its AI presence. Additionally, Meta has been employing a lot lately in an attempt to staff its freshly established Meta Superintelligence Labs. Along with other AI research initiatives, that business unit will focus on foundation models like Llama. Mark Zuckerberg, the CEO of Meta, outlined the company's advantages in leading AI development in a memo to staff members about the new AI unit. Compared to smaller labs, we can build out a lot more compute because of our robust business. According to him, we have more expertise creating and expanding goods that benefit billions of people. These are valid points that could help Meta accomplish its objectives and eventually provide investors with significant returns. From a value standpoint, you might decide on Meta because, as has typically been the case, the company is less expensive than Nvidia in comparison to projected earnings expectations. However, a closer examination reveals that Meta's valuation has increased since the year began, while Nvidia's has decreased. In light of this, Nvidia appears to be a more desirable acquisition option, particularly in light of the business's continuous rapid expansion and its engagement in all facets of AI research and practical implementation. In addition, Meta has the potential to become a significant AI winner in the future, and despite its valuation advances, the stock is still fairly priced today. However, Nvidia is still the dominant force in this market and is a stronger investment at its current price. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
It's a top area of concern for the Chinese, Christina, that's likely to then lead to significant agreements, significant progress on the rest of the trade deal. Is this something they're going to celebrate, or is it kind of a footnote?
They've already received a lot of this equipment. So the EDA software, China has been receiving it for quite some time. This ban was only put in place for 6 weeks. So is it a moment to cheer? Yes, because this software is so important to build more advanced chips from the likes of, let's say, Huawei. So I guess Huawei would be the one cheering. But overall, I don't know if it's necessarily a major win, given they still want access to the more advanced chip technology that would be coming from Nvidia as well as AMD. That is really an important part of this equation, but that could, as we're seeing the reversal from President Trump, it could change in the coming weeks or so, given this 90-day pause with all the tariffs and further news that we should be expecting soon on this chip front.
Well, I do think it signals that things have thawed a bit and that there's obviously been a negotiation here. China is going to speed up the licenses of the rare earth magnets, right? And in exchange, the U.S. is going to lift these countermeasures, and one of them was export controls on chip software.
Yeah, so wouldn't President Trump say this is a major win, right? Because China is moving ahead with the rare earths, which is really not only important for chips, but so many electronics coming from the United States and necessary for that matter. So I'm sure this is considered a win. But on the administration's part, we don't want China to receive the most advanced technology, but you have the chip makers that say they're going to move forward regardless, so the United States may as well be part of that equation. It's still unsure how the Trump administration is going to take up that stance. Are they going to agree with the chip makers and say they should, no matter what, just be part of the equation, drop those restrictions, or continue to really put I guess a block on China moving ahead? But it seems like they're already doing pretty well. Huawei's advanced chips are quite impressive, more advanced than the H20s from Nvidia.